artificial that can, analyzing of the market and what have you. And belongs also that I shared indicators with us. And I think because of that, some people have gone angry and they've left, all blah 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 like that. Well, who cares? So, there might be reasons why they left anyway. But whether their reasons are genuine or not, that is, left to them. For some of you that you are still with us, I think we need to give you something like end of the year promo. I mean, gift rather, that you can take home. And this is one of the handsome tools that I've been using for a while, which I'm very sure that's going to help you at the end of it. It's an indicator that prints arrow, as you can see, arrow, buy and sell arrow on the chart. Okay. Now, I want to roll out a kind of strategy that you need to follow step by step, because some of you have been asking me, how can I develop a strategy? Which strategy is the one that can win very well? This and that. I've had a lot of things on that. If you can listen to me very well tonight, I think you are going to have on this video. I don't know how the idea of the time with you, dear. Okay, but it's night, it's already night here. Okay, you are going to have a plan or a strategy that's going to give you money, from time to time. The winning rate is like a 60 to 70%. And some people might say, that's not good. In forex, you don't have something that's 100%. You shouldn't be looking for something. If anybody tells you there's something that 100% is a scam, because the price itself moves in a kind of zigzag movement, up and down. So also the profit also up, down, up, down. Your profit up, down, we are climbing up, down, we are climbing up. Okay, now we have something like 60 to 70% rate, winning rate. Now, what matters most here is, your ability to manage your positions very well. Okay, that's the most important thing here. You might have 40% winning rate, and at the end of the day, you might still be smiling to banks at the end of the day, withdrawing money. It all depends on how well you are able to manage your positions when you enter market, and how well you are able to control your emotions and all the likes. One of the most important things here. No, we have the arrows, printing very well, beautifully on the chart. I can start from anywhere, but I want to start from this place so that I'll be able to start from most difficult one before we move to the one that's very okay. I don't hide things from people. I can just go and start from where, the market moves very well and there's no any loss. I will say everything going to look like. It's not like that, Joe. At time you will see losses and at time you will see gains. Okay. Now let's start with this one and see. Maybe we are able to win this thing or not. Now here is it. And another thing I need to say is this. As you can see here, this is a daily time frame. For the beginners, I will encourage you to stay with daily time frame. You don't have any business dealing with 15 minutes, 1 hour, all the likes. Those one, because of noise here and there, might be so difficult for you to handle. But this one, only one candle per day. The noise are minimal here. You'll be able to handle that one. Although the losses might be so big on many occasions with the daily. So the profit also, not only the losses. Okay, let's go on. Stay with daily first. I don't want to stay long because I want to contain the length of the video. Okay, here is it. The arrow comes, and another thing you need to know here, to what noise is that this is a non-repainting indicator. The arrow will not come up now and a short white are gone that disappear when after you've already entered them. No, the arrow comes up after the candle have been closed. Okay, and it doesn't move away from that plan. That's why you can see something like this, something like this, something like this. No, all right. Now it's not a repainting indicator. Okay, here is it. The arrow is here. What are the rules of the exit and entry? The entry and exit rules. Number one, you wait for the arrow to form. When the arrow forms, for you to enter the market, you allow the low for a set now. Allow the low of the candle that is carrying the arrow to be broken, like 3 pieces below it. Then you enter the market with either market order or a set stop. We use set stop and buy stop here. If you want to place a pending order, okay. Or you can also use a kind of market order. But at times you want to use the market order. Once you want to break your low, the price might accelerate down very fast. That might not, you might not be able to enter until when they are gone far. The idea is to place a set stop. Okay, in the situation where you can place a set stop. Okay, now we place a set stop here, 3 p below this low of this candle. Okay, and our order was triggered. That's another thing you need to know. Once the sell stop does not trigger at the close of the following candle, close it. Cancel it. Cancel the sell or the sell stop. or the buy stop for the buy now. But some of you might like to, some of you that you have been trading for a while, that the sentiment, the market, okay, the downtrend is still on. You might leave, but for the beginners, once you have a lot of these arrows on so many pairs, why do you want to stay with this one and so until when it picks it? No. Okay, once the second candle does not trigger your sell stop, cancel the sell stop. Okay, at the close of that candle the following day. Here, this one triggers it. How about our stop loss and our target? Here is the rule. From this point of entry, you place your stop loss 3 pips of to 5 pips above the arrow, not above the high of the candle, above the arrow. That is for a sell, and below the arrow, that's for a buy. 3 to 5 pips above. Now, how about our take profit? Two things you can do with your take profit. In a situation whereby you can see a kind of how do you call it, a strong how do you call it, support below for a sell, you place your take profit very close to the support. Okay, for instance, here is a support. A support has already formed here. If you buy anything here, you sell anything here, when this one comes, your take profit should be around this support. And you can see the reaction here. When at the market time the price got back to this place, it reacted and moved back before it broke it down here. Okay, C2, 1, 2, 3 could not break this support that established here. Okay, but for some of you that you cannot do something like that, you don't know how to weigh out the support or the resistance or what have you. What you do is that you measure your from entry point to your stop loss, measure it, that like 180 pips, okay, then multiply by 1.5. 180 pips multiplied by 180 multiplied by 1.5. Okay, that will form, that's 270 pips. So with, if you are risking 180 pips, we are expecting 270 pips as our target. Then you place your target at 270. 270 is around this place. Okay, around here. As it is obvious here that market and price did not get to that place before it reverse back, pull back, and pick our stop loss. Okay, now how do we now manage that one? Okay, you now measure your, we use 180 for our stop loss. You divide that 180 by 2. Okay, 180 pips. That is your entry point to the stop loss. Now, that is 90 pips. Once the market moves in your favor for 90 pips, you start trailing your profits. From here now, we measure 90 pips. The market moved up to 90. Are we able to get that? 92 pips. So if you have started trailing your profit at 90 pips, this one will have been profit for you. You'll have been able to get 90 pips out. But if you don't trail it, you will have gone back and hit your stop loss in this place. Okay, so let's say we had 90 pips from the first entry here. The second entry was a buy order. The entry triggers, but it does not move in our favor. It moved back and took away 200 pips. If we remove 90 from 200, we are debited with 110 pips. Okay. The next one that came up here, a sell entry, the second day we couldn't trigger it, and that one voided here. This one came up here, okay, with a stop loss of 84 pips. Okay. Then from this place down to this place, we have 54 pips, no, 57 pips, 54 pips. Okay, that is more than average. Also, if you trade your profit here, you will have gotten, half of your profit. That's 54 plus 90. Remember, we had the kind of, you were in profit now with the loss of 1. Here was another one. From this place, entry point to this place was 184 pips. 184 multiplied by 2, that's 280 or thereabouts. So 280, this one is minus 280. Our 280 is around, that's 280 is around this place. Okay, that one came up in favor of us, in our favor. Winning rate, it was a win, a win trade. Okay, in this place, our entry trigger, we have 179 pips, just like 200 and something. Okay, so market moved 90 pips. That's half of our this thing. So in this place also we have half. If you trail our profit from that place, okay. On this one, the market does not trigger because this one was not up to this place. I don't know how it is on your own, but let's say it triggers, but it does not. So what we'll be making is 197 pips, risking 197 pips to get something like 300 something pips. But we couldn't get to that place, obviously. We have 77 pips. 77 pips. Okay. So the following day does not trigger from this place, just some pips to the place. If you put like 5 pips ahead. So that one you can see. You have to wait again until when we go to this place. In this place, our point triggered the following day. We are risking 241 pips to get something like 350 pips. But that one did not get to that, it's very obvious. What you have in this place, just 170 something pips. We have half of our entry here also. We trade the profits. In this place, it triggers also again the following day. Here is it, triggered. We are risking something like 152 multiplied by 1.5. That will give us something like 200 or thereabout, 210. Okay, it was a winning trade here. We won that one also. We've lost one trade since we started the trading together. In this place, all this one are okay now. That's why I did not start from this place. We have this one. We are risking 163 pips. We multiply that one by 1.5. 163 multiplied by 1.5. We have 244 pips as our target. Now I'll go to that money it. 244 was another display. In fact, here we've gotten it. The another one came up here. That also went in the profit again. You can see what we are talking about now. We are risking 195 pips or 176 pips. Okay, 76 pips. Okay, up to this place. Here we have 212 pips. In fact, it's even though went more than that because this one, when it comes back up, it did not get to our take profit. Our stop loss rather, sorry. When the price come back up, our stop loss was still intact here. So it came in our point, our favor. Here is another winning trade. So if you look at most of them there, you will see there's no any one that we are going to lose anything at the end of the day, including this one. As simple as short as it's okay, maybe this one's not up to half. Okay, but I think it's something that we can. Here is it. We are risking 170. 170 divided by 2. 174 rather. 174 divided by 2. We have 87. 87. This is daily. Can you see 88? It's even the more than 87. So this one will have pick your stop loss. If you trail it from that place, it will have pick it from this place. Okay, once you get to that place, it will have pick it for you when you trade your distance. In this place, this one did not trigger at all. Not get up to it. Okay, in this place, it does not trigger. Here, first day does not trigger, but second day trigger, and it went up. Here also, first day does not trigger, second day does not trigger. For a day, it will have pick our stop loss. Okay, here the first day trigger, and it went on our way. The last one here, a buy, it does not trigger. Here it trigger. This is where we're supposed to be now. We're supposed to be in sell now on this one. This 174 again, and 174 divided by 2. What do you get the other time? 87. 87 pips. But now we should have been, we should have started trailing our profit here. But that will have stock us out, because you should have started trailing your profit from 87. That should have been here, and that would have struck us out from this place and from this entry. Okay, God bless you. So I will share the indicator with you. If you have any question, ask me. No alert there now, no EE. If you need all those ones, you tell me later, and we can bargain on that. It's going to, that one cannot be, can be free, can be free. But this one is free. I will share the indicator with you. God bless you.